Greetings, members, one and all of the Salivation Nation. Gold and silver fall as the Fed signals rate hikes. Let's explore. Indeed, we are looking at the markets now as the meeting is now over that the Federal Reserve had held over the past 2 days and sending some signals our way, although none of it really much of a surprise, but the metals did react nonetheless, mainly because of what Powell said. And after this meeting was over from this statement, we'll look at that here momentarily. But as we look at the market here with less than an hour to the close, gold is down $30, down 1.66%. It actually fell a little bit harder than silver did, amazingly enough. But silver still fell substantially, down over a percentage point, 1.4 percentage points, down 34 cents. So gold and silver took a little bit of hit as those hedges. But platinum and palladium are both up. In fact, palladium, it should be noted, is taking a pretty big upswing to reaching the numbers we saw quite a while ago, up $121. Crazy town for palladium. So those of you who bought a little bit of palladium during the dips, well, you're sitting fairly pretty right now, up over 5.6%. But, you know, the platinum group metals kind of often work sometimes in opposition of the other metals, but they are in a world of their own to some extent because they are largely industrial metals, and a lot of this very well could be due to what's happening in Russia. Instability with what Russia is doing and signaling in Ukraine could mean that the access to palladium based off of sanctions means that supplies will be very limited, is my guess. But this video is not about that. We may talk about that in another video, but we're going to talk about what the Fed did today. We're referencing an article first from FX Empire. Gold prices fall as the Fed points to rate hikes. And the Fed did not mention running off its balance sheet, which was a dovish sign. And there were no surprises today, and my prediction, I made a fairly bold prediction that they would actually cut it by a quarter point now, and maybe another quarter point in March. That did not happen, and they are signaling perhaps that they will raise it in March. Gold prices have moved lower after the Fed decision. In some way, it does surprise me a little bit because I'm of the feeling that this talk about what the expectations are, and they largely met those expectations, would have been baked in. But again, just a few words can mean a whole lot. I remember specifically during a time when Janet Yellen was Fed chair, she made one sentence and it moved the markets a certain way. It was insane in the membrane. The dollar moved higher along with the entire Treasury yield curve, which edged up. Despite the move up in Treasury yields, riskier assets like stocks outperformed. The movement into riskier assets likely weighed on the yellow metal. The interest rate curve is pricing in 100 basis points of tightening in 2022. Think about that. If there's 4 quarter-point rate hikes, that's a full percentage point. And that's what that's referring to. The upwards movement in Treasury yields has weighed on refinancing. Mortgage refinance applications, which are highly sensitive to daily rate moves, fell 13% for the week and was 53% lower year over year, according to the Mortgage Bankers Association. And we saw the gold prices move lower, but you think about the housing market and how delicate that is. If rates move up too much, that's going to weigh on that. And people are saying things are slowing down in the housing market, but we've heard that for several months now. And but prices are up everywhere. Your reassessments are going up in most places, in most localities. Gold prices moved lower on Wednesday and whipsawed after the Fed support is seen near the 10-day moving average at 1,1830. Resistance is seen near a downward sloping trend line that comes in near the 1860 level. Short-term momentum has turned negative, and the fast stochastic generated a crossover sell signal I mean, some of these technical terms to kind of see where things are and these wedge patterns that you see forming here. But nonetheless, we'll see how it plays out. The fundamentals are kind of at play here. We're at the mercy of what's happening and with what the Fed does and what they say. And we're going to get into that from this article here from Kitco News from Anna Golubova. The gold price has tumbled $35 at one time during the day as Fed Powell says inflation is slightly worse than in December and then signals a March rate hike. So Jerome Powell, the chair, described the current inflation situation as slightly worse than in December, stating that there is without hurting the labor market. And so, I guess that's trying to put a positive spin on inflation, only slightly worse. He says there's quite a bit of room to raise interest without threatening the labor market. This is by so many measures a historically tight labor market, he says. A record level of job openings, quits, wages are moving up at the highest pace they have in decades. The problem with Powell's statement is that this labor market being tight means that we need more employees, but then the positions are still so many positions not left filled, which means some of those positions essentially have disappeared, but they still need a lot of help. And I can vouch for that because, I am in contact with the IRS over a tax return that they have not processed in 2 years. They need people there. They need people everywhere. In fact, I just got off the phone with the health department, and they're talking about much of the same thing because they're following up after my COVID diagnosis and talking about some of these interesting things. Fascinating indeed, and how a lot of this stuff is affecting the labor market. So this statement here makes you wonder if Powell was a sycophant for the Biden administration. I can't think of anything else other than they're trying to create this positive spin on something that's not very positive, that's pretty depressing right now. And when he talks about wages moving up at the highest pace they have in decades, yes, that's true. However, inflation is moving up even higher. Think about it, folks. Inflation is moving up at 7%. Wages are growing like I believe about 4.4%. And that would be good. That would be very, very good under an inflation rate of 2 or 3%. But no, that's falling short. People's pay are getting cut. They're getting cut. People are not earning as much now. And I'll give you an example. I got promoted at my job, and the promotion that I got at my job turned out to be slightly above the inflation rate at the time, and now it's below the inflation rate. So go figure. Mr. Powell, I think you need to go back and do a little bit of research, or at least tell us the truth and be a straight shooter with us, because things are not rosy in the economy and in the wage growth. Historically, when inflation hits, raises or wages fall behind in that regard. All eyes were on the Fed chair Wednesday afternoon after the U.S. Central Bank held rates steady, but signaled a rate hike in March. And so that's going to be coming. But again, this statement that Powell said, which was really categorically, I'm going to say it's not true. The markets react to their truth, or what the truth that is purported forth by the Fed chair, and they react accordingly, sending the dollar up, bond yields up, gold and silver down, based off of a fallacy for all intents and purposes. I'm sorry, but that's just the way I see it. I can't tell me where I'm wrong. I just don't understand how Powell can come to this conclusion. But nonetheless, these people and these institutions, they try to gloss over and sugarcoat what's happening here. He clarified the Fed's thinking around the March rate hike, stating, "The committee is of the mind to raise the federal funds rate at the March meeting. And more than likely, it's going to be just a quarter point." And, I feel like he feels that things, as long as when he says something, it's going to, send shockwaves through the market in positive territory. I don't even know what the stock market's doing. Don't care, because we're looking at the dollar and we're looking at gold and silver right now. My guess is the market's up too. In response to Powell's message, gold plunged more than $35 at one point, and again now we're seeing it just around $30. $31 now. People, it's starting to kind of snap back a little bit because people realize, pretty much that what he's saying is not accurate, and or it can be twisted or spun a certain way. That's the thing. The truth can be spun a certain way to make it appear really good or really bad or just realistic. And I believe in realistic truth, using figures and statistics to show what's really happening around the economy and the world, as opposed to a rosy painted picture. Nonetheless, we have COMEX gold futures last trading at 1815, down 2% on the day. The U.S. stock market has also reversed gains following Powell's press conference, with the Dow falling 0.9%, the S&P 500 down 0.8%, and the Nasdaq dropping 0.9%. So the markets are actually a little bit down, reversed gains following this conference. So it's pretty interesting to see the stock market react opposite to what gold and silver are doing and what the dollar is doing. I will say this, that when you think about these situations, what we know what's going on in the economy, and the prices go down like this, it provides a buying opportunity. And I believe it is a buying opportunity for those of us who have the ability to do so, to buy a little bit of gold or a little bit of silver. I think it's a good time to do it. But nonetheless, there's where things are, and it's interesting to find out what's happening. And in fact, one thing we do know, there's others that are taking advantage of buying opportunities, and we've seen that all throughout 2021. Record levels of gold sold from the United States Mint and the Perth Mint, as Silver Heist pointed out, and a video that I did earlier today. Hope you will check out, because I think that's very important as to where things are going with gold, especially with this huge buying that had occurred. Check out the video. I'll post a link to it in the end screen of this video. Very important video, I believe, signaling kind of where we are going with precious metals. People are waking up, and it's exciting to see it, whether it be in the ETF or in the physical space. In both areas, we're seeing activity, and that's always a good thing for precious metals. I believe in the end, no matter where you position yourself, no matter how you diversify in your portfolio, whether it be within the stock market, certain investment strategies, and within the precious metals space, in terms of ETFs, mining stocks, and what have you, I always encourage folks to get some physical, at least enough, because you never know what's going to happen down the road. And when we see prices go up, I believe that will be the time. And when we see them go parabolic, you will be very happy that you have the actual physical metal in your possession. So there you have it. Let me know what your thoughts are. I would like to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.